What up, Trusted Signals family, and welcome back to the channel. Today we're going to talk about divergence. Divergence is another one of our tools supplied in the 9 indicators that we have to offer. What? Did you guys? Oh my God. There was some guy in the street yelling, telling me that I gotta tell you guys, please like and subscribe. Please do like and subscribe. There's gonna be a lot of videos and content coming through this channel. So I hope you guys like this video, and let's go. Welcome back. So the big topic of today, a tool that's called the oscillator divergence, which is part of the 9 indicators that we have to offer. What is divergence? Let's just take a look at our cheat sheet. This is our divergence cheat sheet. You've probably seen this floating around the internet, and this basically breaks down what is divergence and how to scope it out in the market. Basically, it shows in a bearish divergence, you're gonna see price moving up and the RSI going down. In a bullish divergence, it's the opposite. Price is going down, but the RSI is moving up. So in the beginning, what I used to do, I used to have this cheat sheet on my iPhone saved as a screenshot, and whenever I would think I saw divergence, I'll pull up the screenshot, look at the phone, look at the market. I'm so glad that we came out with this. So now you can skip that whole process of looking at a cheat sheet. You could just look at the market, look at the charts, and it's there for you. Let's just look at this example. Here, we can clearly see that there's a downtrend happening by these wicks, starting from here all the way down to there. So looking at this price, we have a push that's going down. Price is slowly moving down on this little downtrend here, and look at the RSI. It's up. Here's the low point and here's the top point. And here's the opposite with the price. Price starts high and goes low. So if I was in the past looking at this, seeing that price is slowly coming down without seeing this divergence, any trader would think, okay, market's going down. They're going to go ahead and see a small push going to the downside, enter on a sell. These people unexperienced, thinking that it's going to continue to push down, and boom, they get liquidated and the true direction of the market takes over. Now, the beautiful thing about oscillator divergence with Trusted Signals is we would have seen this movement to the downside, the RSI showing bullish divergence, and we would have prepared ourselves to enter on a buy. The way the market works is very, very repetitive. So whenever there's consolidation, you can see price consolidating, coming down on this small trend, pushing down here, seeing this bullish divergence, having support. This would have been the time to buy here. So using the oscillator divergence, seeing that price is moving down, the RSI is going up, there's a small push to the downside, that is the time to buy. Exactly when this buy signal came in. Now, if you would have took that buy signal using the confirmation of the bullish divergence, let's see how much pips that would have been there. And taking this up all the way up right before this resistance line and putting my stop just below these wicks, below the support. That right there, my friend, is 4,516 pips. Just like that. Using Trusted Signals oscillator divergence together with understanding market structure, you're going to be golden. This is another one of my tools that I like to use a lot. I highly recommend for you to turn on certain tools, take them off, switch them for other ones. Don't have them all on at once, but instead turn each one of them on one at a time to really dive deep into each one of our tools. All right, so I'm gonna do a quick example of a bearish divergence. Here is another huge bearish divergence. Look at this. Price at this point here is low, and price at this point here is high. It is the exact opposite of what the RSI is doing. Here's the high point and it goes down as the lower point. So just to show you, I'm going to put a trend line at this wick going up to this one, and this trend is going up to the top side. This trend is going down. So the RSI again is opposite of the direction of price. So this would be a bearish divergence. With seeing this bearish divergence here and having price moving up, this would have been a perfect time to sell in the market. So this is one of your confirmations here. Your confirmation is that there's RSI divergence and price is moving up. It's hitting a resistance line. You're at a high point on the 4 hour. That is a perfect short. So right from this sell signal, after the bearish divergence, you would have taken a short, put your stop based on this support line and writing it down to this consolidation area. Right here would have been another 2,876 pips using the divergence and our sell signal. Come on, it doesn't get more simple than this. These are the tools that is going to improve your trading system. I guarantee you. Just ask our 300 plus users on our Discord chat who are winning using our tools. Also, what I found that works the most with divergence is using it on the 4 hour. It is available on all the time frames. For instance, if you go into the 15-minute, here, a small bullish divergence, and eventually you see price move up here after this small push. But I find personally that the moves are more drastic on the 4 hour. So I use the oscillator divergence on the 4 hour personally. Why? Because the examples that I just showed you, whenever there's divergence on the 4 hour chart, it just moves. It just moves. And what usually happens is if you don't know what divergence is and you see the market going one direction, it looks like it's going that one direction, but there's a hidden divergence which indicates that the market is actually about to go in the opposite direction. This is a point of reversal. This is a point that people get faked out in the market and lose their money. So to protect your account, to understand the reversal points, when the market is actually going to turn around in the opposite direction, I would use the oscillator divergence on the 4 hour and watch out for those bearish and bullish divergences, because market will be going one way and it will look like price is moving in that direction, but in actuality it's about to do a 360 turnaround and take everybody's money just like that. So to wrap up this video, I highly recommend to use the oscillator divergence. Thank you so much for tuning in. Thank you so much for liking, subscribing. Don't forget to share with your family, share with your friends, and be part of the winning team. Team Trusted Signals. Let's go!